Good morning, team. Uwe Jacobs, Property Friends, Property Strategist. I thought I'll start this video a bit different by getting you to guess where I am. It's not really a secret. Life is tough, but somebody's got to do it. I'm in Cairns at the magnificent pool. Uh, Here it is. Life is tough, but somebody's got to do it. It's a balmy 28 degrees, and we're having fun. Now, let's talk about the real stuff. Um, See if I can bring the camera back to me. Sorry. There we go. Yep. Sorry about that. I just needed to share the beautiful location with you. All right. Counts. I love it when a good plan comes together. Sorry, I've just been for my walk and I got caught at the time, so I'm reporting to you from from my walk, so to speak. Cairns, love it when a good plan comes together. The place is absolutely going berserk. We have had tremendous growth, and there will be more growth to come for sure. I said yesterday, I wouldn't be surprised if there's another 10% coming in the next 12 months. The market is so tight here, it is crazy. The builders are very busy with working off what they have on their books. The trades are crazy busy. They are charging a fortune, and that means that the prices for the buildings are going up. I'm meeting a builder today for lunch. They want to negotiate price increases. That is the way that it goes. Between the first stage at a development, well, I can disclose it, Cutters Rise down in Gordonvale, and the next stage, there is 150,000. Sorry, the mozzies are fierce in the war here. There's $150,000 just in the land in uplift. Again, I love it when a good plan comes together. This is what Property Friends does different. We pick the markets that work on return so that the property investment pays for itself completely, as well as looking for markets that spell some growth. Now let's be clear about that. The growth, thank you for the thumbs up, the growth is crystal ball gazing. No one can predict that for sure. But there are indicators that one can look at and that one can monitor and track. And as the old adage says, history repeats itself. I can very clearly see when I look back 22 years how this thing is happening. The interest rate reduction by 25 basis points to 4.1% certainly will help. It is, in my view, the sign that the good periods are coming back, where we will see further interest rate reductions. In my view, it will be later in the year. In my humble opinion, this was a dual function of people hurting and the economic figures getting better. But it was also, in my view, and this is just my private personal view, a political agenda that had to be done to set the scene for the next election. Anyway, off that. So, prices for land are going through the roof. The building prices are going through the roof. Capital gain is going through the roof. Rents have stabilized, whereby I think we're getting to the point where people can no longer afford more rent. So the returns will be diminishing again from where they're sitting now, and with the investors that have bought with us at about 7%, incredible. But due to the increase in prices, it will diminish and go back to the usual 5.5%. And that is exactly the reason why we in Property Friends choose to invest into larger regional cities. It is simply the rental return that allows you to have a property investment, and certainly with interest rates coming down and the tax advantages that property investment brings, that allows you to run a property investment at zero cash flow effect to yourself. Now what that means is that we have the short-term money, which is rent, to wait for the long-term money, which is capital growth. And capital growth, ladies and gentlemen, is what it's all about. Yes, cash flow properties are nice, but you can't live off them unless you've got 50. And who wants to manage 50 properties? Ulla and I had a very sizable portfolio, let's say it this way, and we have sold down. It's just too much hassles. So we rather do a low number of projects of house and land packages that give us zero cash flow but give us great capital gains. Understand, there is a seesaw effect between cash flow and capital gains. The more capital gains you're going for, the more you're reducing typically your cash flow or your yield, your rental income. The more rental income you go for, the less capital growth you typically get. So, a lot of fun in the big city. Cairns is going extremely well. I'm running around and burning the candle at all three ends, but that's okay. I'm having fun. I hope you're having fun. And remember, you've got to be in it to win it. Have a look at our website. At the bottom of each page is a discovery call button. If you want to have a chat, half an hour, no obligation, no cost. What have you got to lose? You've got to be in it to win it. Enjoy. Bye-bye.